All right, welcome back. We've got a quick NVIDIA update for you, and then I'm going to talk about the wheel strategy. It's an option selling strategy, and how I'm going to utilize that to purchase some NVIDIA shares and also make some income. So, first, let's talk about NVIDIA news. NVIDIA completed their 10 for 1 split, and it's pulling back since the split. I think it's down 18% the last 4 days. We have a lot of insider selling, which they should. They've accumulated these shares over the years. They've worked their butt off, and it's payday. So good for them. Congratulations to all of them. They should be selling shares. That's why we do this, right? A company, you go work for a company, they give you stock options. You can't eat with those stock options. Eventually, you're hoping that those options appreciate, and you're able to exercise and sell those shares, and then go buy a boat or something nice. So good on them. That's what the markets are for. We are seeing some managers and technicians retire because of the appreciation in their stock options. Again, they've won the game. If you got options that were worth 100 grand, but now they're worth 50 million, I, I don't blame you for retiring. So we'll see what that looks like. I don't think it'll be hard to fill those seats. I'm sure there's a lot of people chomping at the bit to get on with Nvidia. So if you don't know Nvidia, you've been under a rock. But real quick, we'll go over a couple graphics. Again, their revenue has exploded. You'll see that here in the near future on this next couple graphics. But last quarter, 26 billion in revenue, 20 billion in profit, gross profit. Just, I mean, phenomenal business. All data center. And again, this is why we've seen the stock go on a blistering run over the years, over the quarters, just accelerating at an unbelievable pace. And again, it's all the data center to run the AI programs and all that. This computer I have has an Nvidia GPU, best computer I've ever used, and it's helping film this video and not have my PC explode. So again, quarter one revenue, just all compute. It's all for AI. The networking, that is going to be some of their data center stuff, and also their software. Again, that's going to be another growth driver for them down the road, is all the software to help all these GPUs communicate and coordinate with one another. So that is the news with NVIDIA. Now let's get into, let's look at the chart. Because again, just blistering, unbelievable skyrocket over the last few years. And it had just kind of a sideways churn there for a while. We had the nice pandemic pop, and then we sold off to $10 in 2022. So we're up, what is that, 1,000%? I mean, just look at that. My screen doesn't even, you're running off the screen. So anyways, over the last few days, we have seen a nice little pullback here. Who knows? We could still keep dropping back to 100, back to 70. I have no clue. We can go to 200. I don't know. But this is a great company, and this has been one that I've traded over the years. I've been in, I've been out, I've been short. I've done everything with this company. But I do want to build a long-term position, and I've just been waiting for a nice pullback. One, I wanted to wait for the split, because it's no longer $1,000 stock, it's $100 stock. That makes it a lot easier to buy shares and sell options. You can't see because my head's in the way. I didn't realize it was down 7% today. So I like that. I like that it's starting to come down. So that's the chart. We're down 18% after a just unbelievable move. It's great that it's no longer 140. We're already down to 120. Who knows how much lower we go. So this is a stock I want to own, but I've been wanting to buy it at the right price. And when it's $1,000 stock, it's hard to sell puts on those types of companies because the collateral is $110,000. So now that it's $100 stock, the collateral is just around $10,000. So before I get into this, read the disclaimer down low. This is not investment advice to you. This is just an example of a strategy I'm utilizing for myself. I've got a couple accounts where I just had some bonds mature, and so now I have cash and I got to figure out what I want to do with them. I don't want to go buy more bonds right now. I'd rather buy more stock. And this is a perfect stock. I had 2 bonds expire for 10 grand, and I'm looking to put 10 grand into Nvidia, but I'm going to do it, and I'm going to get paid to do it. So for that, I'm going to be utilizing the wheel strategy. Now, this is an option strategy where you sell a put on a company that you want to get assigned. I can't make that clear enough. If you're selling the put, your goal is to get assigned, and if you don't get assigned, you're going to immediately turn around and sell another put the next month. So you're selling puts until you get assigned. Then once you get assigned, you're selling calls above your assignment price. So for example, here, if I sell the 110 put, I'm going to hope to get assigned and pay the $11,000 to buy those shares. And then from there, I'll be looking to sell the 130 call. So my worst case here is Nvidia drops to 50 bucks and I got to buy shares at 110. That's not going to feel good. I doubt that happens. But if Nvidia drops to 90 bucks, I'll buy them for 110. And then I'll be turning around and selling calls against my shares. So I picked a strike price that I want to pay for Nvidia. I want to pay 110 bucks. I have the cash in my account ready to purchase 100 shares because every contract is worth 100 shares. You should know this. If you don't know the basics of options, this is not the strategy for you. This is not a complex strategy, but if you don't know what a put is or how many shares an options contract is for, this is not for you. So, again, let's just go over the bare bones here. I'm not going to explain options in this video. You can go on YouTube and figure that out for yourself. But what I'm doing here is I'm selling the July 19th 110 put. I collected $300 in premium. This is 25 days away. I will look to either get assigned or I will close if the value of my option is up 80%. So if this $300 contract that I sold becomes worth 40, 50 bucks, I will buy it for $50, keep the profit of $250, and then go sell another put on Nvidia. So if Nvidia goes back to 140 tomorrow, my option that I just sold for 300 will be up 80% or so. It'll be in massive profit, and I'll look to close that out and then resell another one when Nvidia has some red days until I eventually get assigned. So I'm looking to get assigned, or I will close if I reach my profit target. If assigned, I'm obligated to buy 100 shares of Nvidia at 110. My break even is 107 per share because I'm getting 300 in premium. So I get to take the 11,000 that I'm going to use to buy the 100 shares, and I'm getting 300 off of my shares because I got that for agreeing to this contract. And then if I eventually get assigned, I'll be looking to sell the 130 call, something like that. I'll cross that bridge when I get there. Here's a screenshot of the options chain. It's kind of hard to see if it's a little zoomed out here. But again, my break even's around 110, 107. And if it's below this price, I'll be negative, but I want to get assigned anyways. So 25 days isn't that long. So as the days go by, the theta decay will start to come in, and this premium will become less and less and less. But you can see here on the calls on the left side, a 125 call, you're going to get around 450 bucks. So this is where, if you do get assigned, you get to flip around and start selling calls to collect more premium on your asset. And the downside there is if I sell a call from 125 and Nvidia rips to 150, I either need to buy that call back at a higher price, or I'm selling my shares at 125 when Nvidia is at 150. So that's the downside there, is you're limiting your upside. But if Nvidia stays below 125, you get to keep that premium, and then next month sell another call, sell another call, sell another call. So that is a strategy I've been doing a lot with Tesla. Enphase is another one. I've been doing that really, really well with Enphase. Enphase swings. It'll have these 20% swings, and I'll sell these 140 calls, and then it drops back down to 100 like it's doing now. I buy to close those calls, and now I'm looking to sell puts on Enphase at 90, 95 because I would like to buy more shares of Enphase for that price. But the premiums aren't that great on the puts, and I'm using capital for Nvidia versus Enphase. But when Enphase and Tesla have bigger green weeks, I'm looking to sell more calls because I've been assigned shares already. So this is a strategy for, I think this is great for younger people to start to understand. While you're accumulating shares, you're able to build your portfolio, you build your cash position by just having shares. You don't need to have dividends. You don't necessarily need to have just bonds and dividend paying stocks. To me, this is another way of building your cash. You're getting paid a synthetic dividend for these stocks, especially these more volatile stocks like a Tesla, an Enphase, Nvidia. If you're holding these for the long term, might as well get some premium while you're waiting the thesis out, waiting the story out. So a little bit longer blabbering of myself today, but that is an update on Nvidia and how I'm using the wheel strategy. If you have questions, put them in the comments. Again, look for the disclaimer video down below. This is not advice for you to do. This is what I'm doing because I'm looking to get assigned here. So I hope this video makes sense. Again, selling puts to get assigned and then selling calls once you're assigned. You're double dipping on the premium, and it's a great way to get cash from a stock that you want to own. So that's all I got for you guys. Have a great rest of your day, and peace out.